These scientists are correct, about 25% of Florida would be flooded, along with low-lying areas all over the world.
For years, scientists have theorized about the dangers of the so-called greenhouse effect, the warming of the Earth's atmosphere due to the burning of coal and oil. And in recent months, as David Helene reports, research has uncovered facts to support that theory.
Scientists claim that the temperature of the Earth's atmosphere has been rising over the past 100 years, that the great sheets of pack ice in Antarctica are melting at a much more rapid rate than previously. Finally, that the sea level has been rising with increasing swiftness over the past 40 years. If these scientists are correct, about 25% of Florida would be flooded, along with low-lying areas all over the world. Climate changes could produce widespread disruption of agriculture. The American farm belt might be too dry, and the wheat and corn crops would have to move to Canada. Scientists blame the odorless, colorless carbon dioxide gas for these potentially dangerous changes around the planet.
Wow, what a tragic, tragic situation with the hurricane damage. It is absolutely amazing. You know, I was actually in Tampa, Florida through the hurricane at a hotel. I had to evacuate one hotel after a speaking engagement and go to another hotel. They kicked everybody out. And it's just really devastating. You know, I was in this hotel with all of these people that lived there locally, and they were sitting around the TV in the lobby and talking about the hurricane and so forth, getting reports from neighbors or people on scene, or looking at their home cameras and seeing some of them, their homes flooding and so forth. It's just really, really awful. What surprised me the most is the damage and the death toll in North Carolina, in Asheville of all places. It's amazing how far this damage reached. But as we have seen over and over again, these terrible natural disasters or man-made disasters like wars, they push prices up, they push rents up, and they push the prices of the ingredients of these houses up as the rebuilding efforts take place. All of those supplies, all of those materials, the lumber, the concrete, the copper wire, the petroleum products, the glass, the steel, and of course the labor and the energy, those costs get pushed up due to this devastation, as well as insurance prices. And we all know we've been dealing with higher insurance rates for the past few years. And insurance is something that we've continued to address quite a bit in our Empowered Investor Pro meetings every month. We've got one of those Zoom meetings tomorrow for all of you Pro members. We have a client who is going to be on with us who is really, really an expert, been self-managing for a long time. And he's going to talk about that in great detail, talk about really managing successfully and reducing tenant turnover and just having a much, much better experience. But we've had many insurance people come on over the years and talk about how to beat the game of the insurance issues. Just remember, though, income properties, just like businesses, just like corporations, are pass-through entities. And when your costs go up, when your insurance costs go up, all of that ultimately passes through to the tenant. I know that it may not feel that way because in the moment, it does not pass through. It's not like a commercial lease where you've got a triple net lease where the tenant is paying the insurance cost. But ultimately, it pushes rents up higher. And we've seen that happen over and over again. But let's look at some real data first, rather than these sort of kind of flip-in, unresearched things that houses are too expensive, or, you know, houses are more expensive than they've ever been. Or, you know, I mean, it's just so elementary, some of this analysis you hear out here. And the assumption that is a wrong assumption, I'm telling you folks, there is a very incorrect assumption that is just this thing that goes on in a lot of human minds. And it's this idea that things have to follow a trend line, right? If someone analyzes the stock market and they're a chartist, right? They read charts, they do technical analysis. They think the chart tells us everything. But if they were right, then why aren't they trillionaires? I mean, the market is infinitely scalable, the stock market, right? It's really easy to scale in stocks. You make money, you put more in, you put more in, you put more in, you just keep doubling down on your bets, right? But look, no one gets it right, okay? No one gets it right. Even the best fund managers in the world make all sorts of mistakes, and arguably their returns are lower than just the index, right? Just buy the index. And so look, nobody really knows. But that doesn't stop them from being very self-assured, right? So this article says housing demand firming up with lower mortgage rates. Pending contract data is getting better even during a seasonal decline period. So in other words, more homes are going from for sale to pending, even though we are in the lowest seasonal point of the market cycle. Okay, so for example, the weekly pending sales numbers in 2024, so now, right, the weekly pending sales, 362,000, well, I'll just round off for you for speed, 363,000 pending home sales. 1 year ago, that was only 341,000. And the year before that, it was 380,000. Okay, so there's your compared to what? Right? Pending home sales quite a bit better than they were a year ago. And everybody, of course, is complaining about lower sales volume. And I understand that because sales volume definitely decreased quite dramatically when we had these massive interest rate hikes. But sales prices, different than volume, kept going up and still keep going up, even though all the doomers and all the crash bros said they would decline. So this chart is really interesting because it really shows you what's going on exactly, okay? So pending home sales, again, 363,000 right now. A year ago, they were lower. And so there's 6.4% more single-family homes under contract than last year at this time, even though we are at a seasonal low point. So very interesting. We'll see how this plays out. Now, I've shown you this chart many times. It is the analysis we did along with our economist, Thomas, who you've heard on the show before. And it shows a mortgage qualifying, like a reverse mortgage sensitivity index, okay? And what I mean by reverse is that when rates go down, how many more people can afford to buy? So we used a baseline here of 7%. And of course, rates are wonderfully and thankfully lower than that right now. But again, a half a point drop, 50 basis points, 2.8 million new people can afford the median price home. A 1 point drop to 6%, 5.4 million new people can afford the median price home. And if we get to 5.5, which I think we will, Fannie Mae thinks we will, and several other big players in the market think we will, then 7.7 million new buyers can afford the median price home. So again, just assume maybe a third, give or take, enter the market. So the lowest point, that means a million more people have entered the market now. Now, this doesn't count 11 million illegal immigrants who have been let into the country by this idiotic administration we have. Not that I have an opinion about that, but folks, look, this is just basically treasonous. This is treason being committed by the current administration. They are basically giving your country away. There's no other way to look at it than that. They are literally giving your country away. They've let in about 600,000 convicted murderers. This is true. It's been verified. Multiple news organizations have verified this. Look it up, okay? And 11 million overall during this administration. So what does that do, though? It increases demand for housing. They haven't built 11 million new homes, okay? And granted, of course, these immigrants aren't going to buy a house, okay? They're going to rent. They're going to get government aid to rent the house, which will put more inflationary pressure because more government spending. Yet we've got this massive homelessness problem, especially among veterans. That is the most awful, evil, disgusting thing, that they would prioritize these criminal immigrants or any immigrants that are illegal over American people that fought for the country. I mean, look, I'm no fan of war, but that wasn't their decision, okay? It's just awful. It's just absolutely awful and treasonous what's going on. Okay, so here is First Americans research. So they say that this year's holiday gift is improved affordability. The RHPI, now remember, this is my second favorite housing index, okay? The RHPI, the Real Home Price Index it stands for, measures affordability by adjusting First American Data and Analytics House Price Index for purchasing power, how income levels and interest rates influence the amount one can borrow. These factors are expected to change in the following ways through the remainder of this year and deliver the gift that every potential home buyer wants this holiday season: improved affordability. Folks, we're right here in the pivot. Incomes have gone up, prices have gone up, rates have come down, housing affordability has gone up. So looking at this chart, okay, what this tells us, this goes back 24 years, okay, and it shows you the real house price index, okay? Now, the other thing to understand is the higher the RHPI, the lower affordability, okay? And then the other thing it shows is house buying power. And you can see here that house buying power was way high during the COVID era with low interest rates, and affordability was very high. And here we see that it went down with the interest rate hikes, and now it's more recently gone up. And in the gray part, they are expecting and projecting that it will become even better. So the real house price index will go down, meaning the real price of the house is lower, and the affordability will go up. And that's exactly what's happening. So, hey, Crash Bros, you've been wrong. You've been wrong for a very long time, and it looks like you're going to continue to be wrong. There's just no real data, no real well thought out data to support the crash thesis. And yes, I know some local markets are adjusting. And look, if some big exogenous event happens, of course, everything's up for grabs. Don't get on my case if World War III breaks out after Kamala is selected, if God forbid she is, okay? Isn't it amazing? For years, everybody said the Republicans were the warmongers. Now it's the Democrats that are warmongers, okay? Everybody said for years that the Democrats were the party of the people, of the common man, and that used to be true. But now the Democrats are the party of the rich elites, and they have totally abandoned the common man. But it just shows you the power of branding and how long a brand can last. And, you know, I saw that before I left the Socialist Republic of California in 2011. I would talk to people and they would still think, oh, California is so great. It's like the greatest place. And, you know, that used to be true. I mean, I remember as a kid growing up there, I loved it. It was the greatest place. And if you look at old movies, which Hollywood perpetuates these stereotypes that are just no longer true, you know, look at like any movie that depicts the Beach Boys or Gidget or any of these, you know, older TV shows or older movies, right? And it's just like California is this fantastical, great place. But now so many parts of California have just turned into utter shitholes, honestly. Now, granted, there are some isolated pockets, some little bubbles like where I used to live in Orange County. Thankfully, that's, you know, such a beautiful, nice area. But there's a lot of pressure from the outside, the nearby areas that will affect those areas ultimately. So if you can, you know, I've told you one of the best things you can do to improve your lifestyle and your wealth is to move to a lower cost of living place. I know that everybody can't do this easily or doesn't want to do it, but just consider it. Just keep it in mind and have an open mind to it. Because when I went across the Arizona border, when I left California, my state tax rate went down by 69%. And then I moved to Nevada and Florida, and my state tax rate went down by 100%. It went to zero, no state income taxes at all. And when the housing cost is lower and everything is cheaper, it's really amazing how you can just build wealth so much more quickly. Okay, so here are some highlights from the First American report. As of August, right, real home price index highlights. First American Data Analytics and RHPI show that in August, real house prices decreased. Did you hear that? The real house price, when you take into account the price of the house, the mortgage payment, the incomes increasing, right, and the interest rates decreasing. When you take into account these multiple factors, you get the real price of the house. That's why this is my second favorite index. What's my first favorite? The Hartman Comparison Index. Of course, I'm a little partial. The HCI is my favorite index for housing. But again, I don't have a whole team of economists and a zillion resources, so we're doing what we can with what we have. But at least the data is much more real here. Okay, so real house prices decreased 3.4%. Real house prices decreased 4.4% year over year. Okay, now this survey is as of August, so it's not, completely current. It's the most current one they've published because there's always a lag time, right? But 4.4% decrease in home prices in real prices. Now, the price of the house went up, but inflation happened, interest rates changed, incomes went up, right? So that's the real house price. And I didn't mention inflation before when I was talking about the real house price. Of course, you have to put inflation in there. Consumer house buying power, how much one can buy based on changes in income and mortgage rates. Important. Increase by 4%, okay? 4% year over year, and increased 4% between July and August, and increased 9.3% year over year. Wow, that's amazing. Median income has increased 3.1% year over year, and 56.7% since January of 2014. Real house prices are 32.9% more expensive than in January of 2000. Okay, so they are more expensive than they were then in January of 2000. Now, doesn't that prove the thesis I just mentioned? Yes, it does, Jason. It does prove it. Because imagine if someone were sitting in the early 2000s and they said, well, house prices are so high, they have to go back to the trend line. Just look at the chart. The chart said that they were cheaper in January of 2000, so they have to get cheaper again. No, they don't. No, they frickin' don't. Things can become permanently more expensive. Look around. A lot of things are permanently more expensive, and they're not going to get cheaper. I mean, maybe they will someday. How long do you want to wait? How many deals do you want to miss out on while you're waiting, right? Last thing, unadjusted house prices are now 62.4% above the housing boom peak in 2006, while real house buying power adjusted home prices are 6.9% below their 2006 boom peak. Everybody's saying house prices are so much more expensive than they were before the Great Recession, so they've got to come down. No, they're actually cheaper. Did you hear that? They're 6.9% cheaper. You've got to take into account, how are these people, economist, educated people, how are they going around not understanding these basic things that you have to adjust for inflation? You have to adjust for incomes increasing. You have to adjust for home prices. Of course, they're doing that. They're doing that one thing, okay? And then you have to adjust for interest rates to get the real house price. That's what's important, is the real price, not the nominal price. So here, the report ends with a cautiously optimistic outlook. Now, why do they say that? Because they're coming from the perspective of home affordability. They are cautiously optimistic about affordability. That's what they're talking about, not about investing, right? That's a different concept. If mortgage rates fall to 6% by the end of the year, household income grows at pre-pandemic historical average of 2.9%, and nominal house prices increase by 3.9% annually. Now that's actually quite low. So I guess they're saying if they don't increase as much as they probably will, then affordability will improve by 7% at the end of the year compared with 1 year ago. Industry estimates predict that next year will bring even lower mortgage rates. The potential for further relief in the coming year could be a game changer for those waiting to enter the housing market. You know what this says? It says buy, buy, buy. That's basically what you're hearing here. And this is not my data. I'm just reading you the report by a giant player in the marketplace, First American. They're a giant title company. They have a great economist. We've had one of their economists in the past on the show before. This is good data, folks. This is really good data. And then I shared with you some other data from Housing Wire. All right. If you haven't registered yet for our Wednesday upcoming monthly masterclass, this time we're going to be talking about Northwest Indiana, and it's going to be really good. I did a one-on-one call with one of our clients the other day. And by the way, if you want to book a one-on-one with me, I'm reasonably priced. So feel free and we'll get on Zoom and we'll discuss your portfolio and everything specific to you. So happy to do that. I'm happy to look at performance with you, help you complete performance, help you change them. Just ask any of our investment counselors and you can book a one-on-one with me. I was doing this with our client the other day. I was looking at 2 of his deals in Northwest Indiana, and those deals are fantastic. I mean, people are basically they're arbitraging their income there. They're getting Chicago income and they're paying Indiana low taxes. Isn't that great? That's a great deal when you can arbitrage, right? You can get the high income from one place in Chicago, which the incomes are very high, and then you can arbitrage it by living in a less expensive place. That's what the tenants are doing that rent houses. And the rent to value ratios are phenomenal. So you definitely want to join us for this upcoming Wednesday masterclass. It's the second Wednesday of every month. And the link, of course, is easy. It's jasonhartman.com/Wednesday. jasonhartman.com/Wednesday. Do not miss this one. It's going to be really, really good. And by the way, thank you for all of your positive comments about our monthly meetings. We've had some great feedback. The last one was on second citizenship and offshore planning. And that's such a big topic. We couldn't even come close to covering it. We're probably going to do some follow-up sessions on that and with our asset protection attorneys and things like that. So we'll get to that, but you know where to get those people if you need them.